Hey everyone, this strategy is a little bit longer term. We're going to be looking at the Magnificent 7 Leap long-term MA trend, so moving average trend here. We're going to want to make sure that price is above both the 50 and the 200 moving average. As you can see, it's up a few $100 today, 150 bucks, about 5,200 here. Uh, since we started this, and then that's about 10.5%. So let's just take a look here. Here's the daily P&L metrics. So you can see that we just started this actually back in May. It is on a $50,000 recommended budget because these are some bigger names, but so far everything has worked out pretty well up and to the right with the P&L curve here. And if we just look in here, this is how we're kind of looking at it. It's a little more complicated of a script, so we'll kind of walk through that. Start time here, we're not going to be as worried about the entries here. So if we get the entry in the morning, it is kind of a leap situation, and this is something we're going to be looking at 365 days a year. So we're just going to have this run all day. So we'll just get into it the next day whenever the option's open. And then you'll have your script. So this one is making sure that price is above the 50-day and price is above the 200-day period. And then if that is the case, we're going to enter a call leap 360 days out. It's going to be a 25 delta because we're going to go out of the money because we're going to want to see how much we can maximize value on these over a 1-year span. And it's further out of the money, so you're not going to see kind of, the losses as big. They're kind of already, lower dollar value here. So it's going to let you trade a little bit. And then on the script, what we want to see here is if that 200-day moving average breaks, we're just going to get out of this position. We don't want to be in it. That's a long-term trend. A lot of people like Paul Tudor Jones use it. So, famous hedge fund managers even use the 200-day as kind of that long-term trend movement here. And we will sell on that immediately. And then our one closes the other position here is 300% value on that 25 delta leap, and then a 50% loss. Now we do have a secondary script here, and the reason why we have this secondary script is just in case the 50 and the 200-day moving averages are inverted. So we want to make sure that price is above the 200-day moving average, has crossed above it, and price is above that 50-day moving average. So it's just the opposite, and it'll trigger the same thing. As you can see, go down here, call leap 365 days, 25 delta between the mid and the ask. And the same script to close it, crossing below that 200-day moving average. And that would be immediate. And then one cancels the other for 300% or a 50% loss. So that is the Magnificent 7 Leap long-term moving average buyer. Have a good day, everyone.